For Thursday, the 31st of March, 2016, the last day of the month. What do we have going on in the market? Well, we always jump into the total market first, and we do see that it is up as represented by IYY, an exchange-traded fund, the iShares Dow Jones U.S. Total Market Index Fund. It was up 0.33%, so about 1/3% for the day. We redrew our trend line recently, and it continues to move up with that trend line. What do we have going on as far as our MACD and derivative oscillator go? Well, the MACD is continuing to narrow between the MACD itself and the signal line. Our derivative oscillator continues to lose speed, and that's a pretty steady loss of speed, although we did see price rise throughout the course of the day, but it does look like the market's getting rather long in the tooth. It has reached a new recent high. Now, what we want to do is drop back from our 2-day chart and take a look at our 4-hour. What do we see? Well, a lot of movement up in the morning with some down movement, pairing that back in the afternoon. On our 4-hour chart, we do technically have a crossover going up at this point, and we do have, as far as the end of the day goes, we do have our derivative oscillator flipping over. So about the time we have the crossover occurring, derivative oscillators flip. Now you'll want to watch for that very closely in the morning. We're above the 2-day trend line. We've had our pullback on the short chart and a rollover, so that is typically the time to look at hopping in on a virtual trade. Now IYY represents the broad total market. Let's go from there and jump into and just see what a tradable position might be, if there is one, in the S&P 500 as represented by by SPY. We see that again crossed over way back on the 16th of February on our 2-day chart. A few time periods of a rollback, had one recently starting on the 2-day chart on the 23rd, followed by the 24th of February, and then movement up for the day, the 2-day candle ending on the 29th, and then the candle that started forming over the course of Wednesday the 30th. It will end on Thursday the 31st. We've seen a continued up movement above the recently redrawn 2-day trend line. If we drop back and look at what happened on the 4-hour chart, we do see that we have a confirmed crossover. Those of you who were paying close attention saw that confirmed crossover take place as the morning candle closed. You may have perhaps gotten yourself into a position on a virtual trade this afternoon. We told you to watch for that yesterday. Hopefully, we've seen that occur. The only caveats, again, things to be worried about. Derivative oscillator on the big charts continue to lose speed, and we have seen the MACD and the signal line again getting closer together, even though the price movement continues to go up, and we still have a good bit of territory that the market can move up on the volatility bands, the Bollinger Bands. And again, we can see a reverse. And if you start worrying about the derivative oscillator never oscillating, going down and then back up again, well, a reversal pattern shows when the market originally started going down at the beginning of the year, tried to recover over a few days, and then surge back down again. It is entirely possible that the market can continue to move up and surge up. But be careful whenever you see a lot of energy being lost in the derivative oscillator and your MACD and your signal line start getting closer together. It can mean that you're going to see a halt in the near future on the continued up movement. So again, everything's paired with a little bit of risk. This is why you're doing your virtual trades, practicing, learning, taking lessons, taking note, paying attention to just what's going on. This is how you become an expert in all of this. That is by practicing, paying attention every day for just a few minutes and practicing constantly. Doesn't cost you anything to do virtual trades, does it? Except just a little bit of your time. Use it wisely. Okay, going to range. We're back out at our 2-day chart. Oh, and for the record, the S&P 500 was up 0.44%. We're going to go to the Qs next. That's the NASDAQ 100, the tech stocks, up 0.49% for the day. Again, derivative oscillators lost some energy, not quite as much as we saw on the S&P 500, but the MACD and the signal line still have some distance between them. Again, it has been getting closer as it gets higher, but again, we look at the first day of the two-day candle on the 30th of March, and we see that it has continued to move up. If we drop back and look at our 4-hour chart, we see that we had a surge up, crossover as we told you about, occurred in the morning. Hopefully, those of you who like the cues like I do, jumped in on the morning, got yourself up in a position as that candle was building. It paired off some in the afternoon, a huge surge up in the morning. We shall see how that position now that we had the rollback that we talked about. The rollback started around the 23rd in the morning. And then what we saw happen was as the market rolled back and then when it started to take off again, and that was confirmed in the morning on the 30th, we saw the market start moving up. Again, that 4-hour movement paralleling the up movement in the larger chart, which is what we look for. Let's see how that works for us. Now, lastly, we're going to stay on our two-day candle. We're going to look at gold. And like I said, for the record, the Qs was up 0.49%. Gold down 1.4%. Gold was in a confirmed down move, having started moving down on the two-day chart back on the 15th of March. If we drop to our 4-hour chart, what do we see going on with gold? Well, gold never recovered. It never crossed back over going up. So we do not have any kind of signal at this point to get into gold. It did move down over the course of the day. Derivative oscillator had flipped over positive, still positive in the morning and the afternoon. Not enough energy in gold, of course, to make that crossover on the moving average convergence divergence. So we didn't have that rollback take place before some of this most recent down movement occurred. So we will just continue to watch gold at this point. Hopefully you got into one of the two trades with the Qs, that is the NASDAQ 100, or are looking now at this point. If you didn't already get into the SPY, you'll be looking in the morning. Let's continue to watch and monitor things. Remember, the charts give us clues as to where the market may be going in the future, but it is not a perfect science. It is much more of an art that you have to learn, practice, and that's what we're trying to encourage you to do here. If you haven't listened to our 15-minute How to Read a Stock Chart video, you need that. You also need our charting layout from freestockcharts.com. How do you get those? You simply go to our website, chartingwealth.com, sign up for our newsletter, which will include these daily reviews, plus our weekly review and forecast. We'll send them to you every day, plus that once-a-week review. And you'll get, as a bonus, both our How to Read a Stock Chart video and the charting layout. That's chartingwealth.com. Follow us on Facebook, Twitter, Instagram, YouTube. We appreciate you, and we love to hear from you. Thanks so much.